There's a phrase you don't hear often in crypto: the blockchain that banks actually trust. But it exists. And it's been running quietly, reliably, and nearly uninterrupted for more than a decade. It's the XRP Ledger, a network built not for speculation, but for precision. Everything here is for educational and entertainment purposes only, not financial advice. Always do your own research before making any investment decisions. If clear, no hype crypto education helps you make sense of all this. Hit like and subscribe. It tells YouTube this series is worth showing to other newcomers, and it helps me keep building it for you. So what makes the XRP Ledger so dependable that banks, custodians, and fintechs can rely on it for real transactions? It starts with something called the Ripple Protocol Consensus Algorithm, or RPCA for short. If you're new to crypto, think of consensus as a digital handshake everyone agrees to before money moves. That's how value transfers without a middleman. Unlike proof of work or proof of stake systems, RPCA doesn't depend on mining or validators chasing rewards. It depends on trust lists, known as UNLs, carefully chosen sets of validators that agree by majority before a transaction is locked forever. That means the XRPL's finality isn't probabilistic like Ethereum or Solana. It's deterministic. Once a transaction is confirmed, it's final. For banks, that's everything. Because in finance, maybe settled isn't good enough. Over time, the XRP Ledger has refined this model with a feature called the Negative UNL, a self-healing mechanism that keeps the network operational even if a few validators go offline. If one node goes dark, others automatically compensate. The result? Public data shows ledger closures typically every 3 to 5 seconds, with consistently high uptime over the past decade. Wait until you hear about the one ledger event no one talks about. In early 2025, the XRP Ledger briefly halted for about an hour, a rare pause in more than 10 years of continuous operation. Engineers identified a validator misconfiguration, corrected it, and the ledger resumed automatically with no data loss. Would you trust a chain that halted for an hour? That's the point. Reliability isn't perfection. It's resilience under pressure. The system worked as designed, proving how the negative UNL isolates and recovers from faults without forking or rollbacks. Let's pause there. This level of reliability is the line between crypto experiments and mission-critical finance. It's why the ledger has had no major forks, no double spends, and no manual resets to stay alive, even through a decade of upgrades and integrations. Here's where the story connects to the institutional world. Ripple, the company that helped engineer and expand the XRPL, built its institutional stack on this reliability. Products like Ripple Prime, Treasury, and RLUSD live on the XRPL and Ethereum, operate on XRPL's deterministic finality and transparent settlement. RLUSD is issued under regulatory oversight, backed one-to-one by cash, U.S. Treasuries, and cash equivalents, with monthly third-party attestations, and since July 2025, its primary reserve custody has been with BNY Mellon. Availability varies by jurisdiction, but the design is enterprise-grade from issuance to redemption. This isn't just about speed, it's about confidence. When you're moving institutional liquidity, whether that's RLUSD redemptions, corporate settlements, or prime brokerage flows, downtime equals risk, and risk costs money. XRPL was designed from day one to eliminate single points of failure. If you compare that to other blockchains, you'll notice something unusual. Where others measure decentralization by how many validators they have, XRPL focuses on who runs them. Different operators, geographies, and organizations coordinating through transparent lists maintained by the XRPL Foundation. Ripple itself now operates a minority share of validators, with the majority managed by independent entities, exchanges, universities, and community groups worldwide. It's decentralization engineered for reliability, not chaos. And reliability keeps evolving. Recent core updates introduced predictive load balancing and enhanced consensus timing, allowing ledger closes to stay around 3 seconds even under peak network load. That's not theoretical. That's from production telemetry, shared on public validator dashboards and performance reports. Zooming out, what does that mean for reliability you can bank on? The ledger's transparency now includes open-source analytics via Clio and the ledger performance tools, where anyone can view latency, throughput, and validator health in real time. For the first time, institutions can verify the system's reliability themselves, not just trust someone's marketing slide. Here's the quiet revolution happening underneath. As Ripple and others build regulated financial products like RLUSD directly on top of XRPL, the line between blockchain and payment infrastructure begins to blur. When uptime, finality, and auditability all reach banking-grade standards, this stops being crypto and starts being infrastructure. Some call this the bank chain era, not because banks control it, but because it finally meets their operational and regulatory requirements. A chartered institution can't tell regulators its settlement rails went down mid-transaction. With XRPL's architecture, that conversation doesn't happen. And while Ripple's long-term bank charter and master account efforts are still in progress, that direction is already visible. Tokenized dollars like RLUSD now move with the same near-instant certainty as central bank reserves. That's not hype, that's infrastructure maturing in plain sight. If you're wondering what this means for crypto overall, consider this. Reliability is the foundation of trust, and trust is the foundation of money. In a market obsessed with speed, XRPL quietly mastered consistency, and that may be the feature that finally wins institutional adoption. So next time you hear someone say, banks don't use crypto, remember, the blockchain many of them test, settle, and build on has been live since 2012. The one that banks actually trust already exists, and reliability keeps evolving. Recent core updates introduced predictive load balancing and enhanced consensus timing, allowing ledger closes to stay around 3 seconds even under peak network load. The same infrastructure now settling RLUSD transactions in production. That's not theoretical, it's happening live on ledger, confirmed by public validator dashboards and performance reports. Some blockchains claim institutional potential, and many deliver impressive speed or scale in isolated ways. But when you look at the full stack, custody, liquidity, tokenization, compliance, and settlement, few ecosystems come close to Ripple's integration depth around the XRPL. The ledger isn't just technically sound, it's the connective tissue linking banks, treasuries, stablecoins, and real-world assets through standards most blockchains haven't even implemented yet. Reliability isn't a marketing term here. It's the outcome of a decade of engineering that other networks are still trying to replicate. This channel is for educational and entertainment purposes only, and is not financial advice. Always do your own research and keep the discussion respectful. If you enjoyed the video, please consider liking, subscribing, leaving a comment, or sharing it with a friend.